global trade is still pretty soft, and that has a big impact on the B2B side of our business. So that's reflected in our numbers. We see a normalization of freight rates, but we also see on the positive side that on the B2C, the consumer-facing shipments, we have back the structural growth that took a dip after the COVID pandemic. So this is a bit what's reflected in our Q4 and also our full year numbers.
Tobias, I know we've asked you before, but I think it's a great window into where the world is struggling a little bit. We see flat growth in two of the European biggest economies, the United Kingdom and Germany. We see growth in the United States, but is it China we have to look to once again for concerns about global trade flows?
Well, it is also Europe, really. We were quite disappointed in the fourth quarter that B2B flows in Europe were quite weak. Into this year, they are quite weak. So this is something that we also see in Europe. It's not only China. But on the other hand, we do see also the intercontinental trade, the China to US trade, for instance. It's bottoming out, but it's not the recovery that we all hope for.
Can we get into the type of recovery, though, because you do compare the second half of this year to the second half of last year, and you say there's more positive global economic momentum. Is it just base effects here?
Well, last year, 2023, we started pretty strongly. We came off the highs of the pandemic, both in terms of volume as well as in terms of rates. The change in rates is tremendous if you look at air and ocean freight in particular. So that's reflected in the revenue figures of our global forwarding business. But that is not as relevant as it is in the structural networks and the asset-intensive businesses that we're in, where we own the assets in Express and in the parcel business. So what you see in last year, pretty good start still, and then a weak second half, weaker than we expected because the global economy didn't pick up, global trade didn't pick up. And this basically is now bottoming out as the year finishes. So it's a soft start also into this year, but we do expect it to get better towards the second half.
The Red Sea, right, has had some impact on some of the shipping costs we've seen already. What's the flow across to the sector? What are you seeing?
Well, first of all, we see that certain revenue streams are delayed just because the cargo arrives later, the billing happens later for particularly goods shipped out of Asia in Q4. So that is more something that, is a effect in the single months. It doesn't really make a big difference to our quarterly or our annual figures. But it is obviously a concern for our customers. So we're actively working, having a lot of discussion with customers. What's the best mode? Can we accept the 10 days additional transit time for shipping along the Cape of Good Hope? It's 10, 12 days roughly. We also have to manage the circulation of containers as an industry. We just have more containers bound on ships that take longer. So this is the type of practical things. It doesn't really translate into that spiking rates as we have seen this during the pandemic, because the underlying demand is much softer and the supply in ocean freight has increased and will increase as we go through this year.
Debt management is always something that the shareholders want to look at. I notice your net debt is up by 12% year on year. Tobias, does that where does that fit into where you want your debt to be longer term? And does that mean that any potential acquisitions, and your name has been mentioned amongst many others looking at Schenker, does that mean it's harder for you to cast your eye over Schenker with a dispassionate eye?
Not really. So these days we have to report leases in our debt positions as well. And as DHL, we rent a lot of warehouses across the globe. And this is really the main component on our net debt position as well. It's the increasing amount of leases, which ain't a bad thing because we do have a growing business in the US, for instance. Our supply chain business, very successful there, also coming into this year with good momentum. So we're not concerned about that at all. If you look at our balance sheet figures, I think the house is very well in order. We keep a high equity ratio of around 34%. So we would have the firing power also for bigger M&A. But we choose as management to deploy capital as wisely as we can. We want to obviously earn good returns for the capital that shareholders give us. And we have a lot of things that we can invest in. We are very interested in the e-commerce space. So we just didn't see Schenker as a good fit for us. There will be others who are interested with us. But as DHL Group, we have better ways to deploy capital for our shareholders.